Ladies and gentlemen, how are you? Hopefully everybody is well and everybody is healthy out there. Today, I'm going to be bringing you guys 5 different stocks in which I think that everyone should at least want to own at this very time. I personally think that these 5 companies I am going to be presenting to you guys at this time, they're overvalued. These are on my watch list. I just want to own these companies badly. However, they are just expensive. So you wouldn't even think that in this market. However, whatever. It is what it is. So you know how I'm going to do it. I'm going to give it to you guys straight. I'm trying to look out for you guys' pocketbook. I'm trying to get us all rich out here. I'm not just trying to be the only one making money. However, I am going to shoot it to you straight. I am not a professional investor. I just do this as a very serious life skill and a life hobby, if you guys really want to call it that. I dedicate pretty much everything I can into investing. So I do a lot of research. However, please do your own homework. Take your own time and look into these companies for yourself. I might be wrong. You guys might think these companies are undervalued or fair price. I don't know. Everyone's got their own opinion. I'm just giving you mine, and I'm letting you guys know what I'm doing. If you guys don't want to do it, then don't do it. However, at this time, we're going to go through 5 different companies. We're going to keep it short and we're going to keep it brief. However, I am going to let you guys know what I think a good buy-in price for me would be if the stocks were to drop down to these values, to these levels. Where would I start loading this boat up at? So without further ado, I want to get you guys the good stuff. So please, let's get into it. All right, so without further ado, we're going to get into stock number 1, which is going to be a pretty obvious one. It's going to be Amazon. This is like the holy mecca of companies right now. Everyone and their mom wants to own 7 shares of Amazon right now. So this is a want to own for just about everybody out there. And everyone knows that Amazon is extremely expensive. Is it fair valued right now? Is it overvalued? I mean, take your opinions. I don't know. At this point, for me personally, it's overvalued. What we're looking at right here is we are just looking at a huge list of companies that Amazon owns. And as you can see, it's extensive. This company owns a lot of different wide variety of companies. It has Whole Foods for its not wholesale, but grocery outlet type thing. It has Twitch, which, I mean, if you're a gamer like me, you know what Twitch is. Alexa, everyone knows what Alexa is. Zappos, Audible, I mean, you can literally go on and on. I mean, they have legitimately, as it states right there, a straight up empire. This bald dude, Bezos, is a boss, son. So this guy's cooking with fire. If we cut over and we look at the Robinhood breakdown, we're going to get into the technicals here. What we're going to do is go to the 5-year. Obviously, we're going to expand it so that way we can see what the entire 5 years looks like, so we can see what the trend looks like. We can see what the pattern is, how it's forming, where it's going. As we can see, Amazon shooting to the moon, and it's just never going to come back down. We don't know. However, if it was to come back down from a technical standpoint, what I can definitely tell you guys is, just because I know how much of a powerhouse this company is, I've already looked at the financials. We're going to get into that here in a second. Just by knowing what this company is capable of, if this company was to drop down to around the peak of this valley and the bottom of this right here, so we're going to be looking anywhere from about $1,700 to a peak of $2,100. So if it was to drop around $300 or so dollars or more, and we start floating around those ranges, I would probably start highly considering buying into Amazon. I mean, highly considering buying into Amazon, if I even had that much cash in the bank. But that's where I would start being comfortable, because I know that this is a growth machine. The market cap on this company is $1.2 trillion. This company is no joke. It's one of the biggest companies in the entire world. So I would feel very comfortable if it was to actually drop down to those technical levels. Switching over to the financials, you guys are going to see probably why I would actually start loading the boat if it was to drop down just $300, which isn't that much. And it's just because, I mean, they are consistently growing this company at an exponential rate. I mean, it's actually quite phenomenal to see a company this large still growing at these numbers. The cash that it has on hand is enough to wipe out this company's debt damn near. So we're playing with a company that has not only phenomenal balance sheet, but it has literally dominated the entire world. If Amazon even thinks about entering into a market space, that entire sector starts dropping and Amazon goes down just from the mere thought of entering into that space. I mean, that's the power that this company has. So take a look at the balance sheet you guys yourself. From right here, I'm just giving you guys a real skim through of this. You can see that the cash is extreme with $32 billion sitting in cash. I mean, they only have what for long-term debt. I mean, they're sitting. They almost paid that off. I mean, they're sitting on a couple $1 billion in long-term debt that they can pay off with one check. I mean, this company is a cash machine. Their products that they sell, I mean, they basically sell anything and anything that anyone could ever possibly want. I mean, it's Amazon. So the list goes on. Stock number 2 we're going to get into, and I think you guys might like this one. Okay, hopping over to stock number 2. As you can see, we're looking at NVIDIA. This is a graphics processing unit, GPU making company. They make high-end, some of the best, arguably the best graphics cards in the world. They have ray tracing capabilities on their graphics cards, which is just leaps and bounds above their competitors, which is AMD. If you guys are not aware, AMD is a high competitor for NVIDIA, but NVIDIA, with them having ray tracing and ray tracing being the future of where computers are going and where movies are going and where everything is really going, they just have a huge leg up in that competition and in that space. Going over to their chart, we're in their 5-year, we're in their expanded chart inside Robinhood, and we're looking at it right now. They're sitting at $289.30. I believe their high was around like $318. So this company, for me at this point in time, is overvalued. I mean, for some of you guys might think NVIDIA, no way, you're crazy, this is a undervalued company, right? Well, to me, it's not. And the levels that I would buy in, technically, from this standpoint, I would be buying in at the bottom of this little dip, this little valley right here. So that's the $205 mark. If this stock was to hit $205 and down, I would start buying NVIDIA quite heavily. This is actually a stock that I purchased once before, 2 years ago. And I didn't hold on to it long. Again, that was my day trading, swing trading time. So, you know, in and out, in and out, in and out. However, if this stock was to drop back down into the $205 range and then even lower than that, I would very, very heavily start buying this stock. Once we get into the financials, I actually looked up, I have pulled up here, 2 different 10Ks because I wanted to get like several years of information, but I'm not going to bore you guys with that one. So what we're going to look at is just their latest 10K report, and this is going to probably sway a lot of you guys one way or the other. Probably once you guys know that the balance sheet is actually really good, you guys probably might start thinking this company is fair valued or undervalued. Like I said, everyone's got their own opinion. So looking at their 10K report, this company's balance sheet is phenomenal. Again, this is another company that they do have some long-term debt. I believe it's $1.9 billion. If we go down here, we'll look long-term liabilities, their long-term debt. Yeah, $1.9 billion. However, if you guys look at their cash and their cash equivalents, this company virtually has zero debt because they have $10.8 billion just cash sitting around. So if they want to, they can write a check right here, right now, be done with it all, and they're in and out. So this company definitely knows how to run a company financially, and they know how to run a company in the sense of creating a moat and creating a strong competitive barrier for other competitors to try and get in and infiltrate. It's very difficult. Like I said, they have a very high leg up on the competition when it comes into their graphics cards, when it comes into their ray tracing. A lot of people are actually saying that Nvidia is going to be a player in the self-driving space. So Nvidia will be creating the software and the chips, etc., to mass produce to all the other car manufacturing companies, so that way their cars can be self-driving just like Tesla. So Nvidia has really high potential and a really high ceiling for growth. So I do want to own this company very badly. Again, I was an idiot for selling. I think I had like an average share price of like 160 something. It was stupid. Anyways, long sad story short later. This company is definitely should be on your watch list. However, as of right now, I'd start buying in at $205. Around $280 is a little bit overvalued for me. But I do want you guys to at least look at this company a little bit more, formulate your own opinion, and see where you guys think. I mean, some of you guys might start making positions right here, right now, and if it goes up, good. If it goes down, well, then you start loading the boat. So, you know, everyone's got their own opinion. At the end of the day, that's going to lead up to stock number 3, and that's going to finish off number 2. So, without further ado, I think that kind of rhymed. Let's get into it, huh? Okay, so stock number 3 is, as you can see, the beautiful Tesla. God, this is my favorite company in the entire world. Yes, I do own stock in this company. Yes, I am going to be extremely biased with this company. I don't care. This company, I own 2 shares in my Robinhood, which is nothing because I use my Robinhood as like my savings account. However, in my main portfolios, my main investment accounts, I own so I'm not going to say how much Tesla. However, my average share price is around $269. Now, I know a lot of you guys are going to think a whole bunch of different things with this company when I show you guys the technicals on this. I mean, everyone's going to have an opinion as to whether this is fair valued, overvalued, you know what I mean, undervalued. However, at this point, at this stage in the game, I am going to go out and just say that I think from a technical standpoint, from just right here, right now, this company is overvalued. Just because, one, my average share price is $269. I would like to start purchasing. You know what? Let's just get right into the technicals. Dang it, I'm getting all excited about this. Here's the technicals. 5-year Robinhood. Expand it, baby. Once we get into it, once you see, yeah, okay, this company hit $900. I get it, yeah. They have huge potential, and they are going to be the future of where automotive goes. They are the most disruptive company, arguably the most disruptive company in the entire world. So this company has potential to disrupt not only the automotive industry, but they're going to create an entirely new industry when it comes to self-driving. I mean, they have their hands in just so much. They're building from the ground up. They know how to run a company like no one's business. Their balance sheet, we'll get into that, is another story. However, from a financial standpoint, I would like to start purchasing back into Tesla. Not back into, I want to add into my shares of Tesla around $400. If this stock drops back down into the 400s and high 300s, oh God, am I going to start jumping in on that again? I mean, this stock has not only gone and shot through the roof, but it's actually been tested. These levels have actually been tested. As you can see, it's going all over the place. This is one of the most volatile stocks. However, we are in one of the most detrimental economic times we have ever faced. And this stock is going up. This stock took a hit for a short minute and then boom, right back up. So the levels that have been tested at is 400, is around strong levels now, when for years and years and years this company was sitting around 200 and something dollars. So 400, you know, high 300s, those have been battle tested, as I like to say, battle tested numbers now. So I would be very comfortable buying into this stock around there. Anything more than that, I just really don't want to disrupt that average stock price. But, you know, I mean, if it starts hitting $500 again, who knows? I might start hitting a little bit more, and then hopefully it goes down just a little bit, and then all of a sudden we start really loading the boat and building our position out way even bigger, because I want Tesla to be one of my biggest positions. However, I do have to go out on a limb here and let you guys know, out of all the stocks that I've given you guys, aside from one, this is probably one of the most speculative stocks I've probably given you guys. We're gonna hop right into it right now. Their balance sheet. Their balance sheet is, if you guys have been following Tesla for as long as I have, you guys would know that their balance sheet is actually in probably the best position it's ever been in. However, their balance sheet is not the best balance sheet I've ever shown you guys, or I've shown you guys two better ones just in this video alone. So they are looking at about $6.2 billion in cash, which is phenomenal. However, they have quite a bit of debt on them. It's like over 11 something billion dollars in debt. Their total liabilities, they're sitting at $26.1 billion, and their total assets, okay, their total assets is $34.3 billion. So you can see that, yeah, they're generating money. Their business model works. Obviously, what they're doing works, and it's going to grow. I mean, they have, I'm not even going to get into it. I can talk forever about why this company, I can justify the price right now. However, I'm not going to, because I think that this is overvalued. However, what I am going to say is their assets, compared to their liabilities, that ratio is quite close. So they do have a ways to go before this balance sheet becomes mature, before their business model matures, and before they're starting to pay out some dividends. I mean, this company doesn't pay out dividends, and I do believe that they are going to be a strong, healthy dividend player in the future. They play in multiple spaces, the car space, tech space. I mean, this is not just a one sector company, even though a lot of people like to say it's just automotives. It's not. It really isn't. So I highly suggest that you guys do research on Tesla. This is a beautiful company to invest in. I love investing into companies that I think is going to change the future for the better, just because that's the world I want to live in, and Tesla is just the company. So look into it. Think about it. Like I said, I can make an argument as to why $700 is justifiable. However, I want you guys to do your own opinion, and I want, not your own opinion, I want you guys to do your own research and formulate your own opinion. And see where you guys want to start putting into this company, or if you guys even want to put into this company. I mean, you guys might not even want it. You guys might look at the balance sheet and be, maybe not. Maybe a few more years when the balance sheet gets a little bit better, we'll see. However, by that time, I think they're going to be Amazon prices. I'm talking, this company is going to be worth a couple $1,000s. Just alone, the market cap is going to be, I think in the future, this is going to be a $1 trillion market cap for this company. So I'm expecting huge growth. However, as of right now, especially with the economic times that we're going under right now, people aren't going to be buying cars. I think that this stock does have some potential to come down. So I am going to hold off right now. And at this point in time, I think it is overvalued. So without further ado, we're going to get into stock number 4. All right, here we are at number 4 out of 5. This one is actually going to be a relatively newer company for probably a lot of you guys, but this is Salesforce, ticker symbol CRM, which actually is the acronym to pretty much what their business model is, which is a customer's relationship management technology company, where what they do is they specialize in connecting customers with the company that they're purchasing from. It's just a better way for user interface and interconnectivity, and just a way for a company to get better information on their customers and their demographics. They are huge leaders. There's not very many competitors that are close to Salesforce when it comes to how broad of a range they go. They service pretty much just about every company for the most part. Their numbers are fairly good. Actually, if I had to be brutally honest, this company is borderline fair price, actually. I know in the very beginning I said overvalued for all of these. However, this one is, in my personal opinion, still overvalued, but man, is it real close to just about fair value, if not, yeah, fair value. I mean, if we're looking at the 5-year expanded chart right now, the stock is selling at $153.98. It got to a high of about $189. So we know that there's still some growth left, but not a whole lot. So the way I look at it from a technical standpoint is when we're dealing with a company that has, for the most part, had some fluctuations, but it's almost a straight line, really. I'm going to need this stock to come down to pretty much the values of where these were. So around the $130, $120 range is where I would start feeling a little bit more comfortable purchasing into this, because then I would know that, okay, well, there's a lot more value now, a lot less risk, and these are pretty much proving grounds. Like I said before, these are battle tested. I mean, we know that this is pretty much where a stabilized number is going to be. This is a hard resistance level. It's tried to penetrate twice and it just couldn't do it. So we know that if we hit the 122 mark, that's a good buy-in. And if it goes down, then obviously we're going to buy in more. That's what we want because we're long-term investors here. However, if it goes up, well, then it goes up. So $122 is where I'd be sitting at for my range. When we look at the financials for this company, they're not like blown out of the water. Oh my God, they're amazing. They do have a really good asset to liability ratio, which is basically double. So it's a 2-to-1. Their assets double what their liabilities are. They do have about $2.6 billion sitting on their cash, on their balance sheet. And they do have long-term debt. They do have debt. However, it's manageable. And this company is doing a very good job at that. They know how to run a company. Their management team is very, very good. This is a very solid company. They have phenomenal growth potential. And they're very, 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 very stable. So, for the most part, this is probably as close as we're going to get to the 5 stocks to this being almost a buy at just the current value it's sitting at right now. So, all in all, Salesforce, ticker symbol CRM, not bad at these levels. So if you guys wanted to look into this company a little bit more for yourself and start formulating some opinions and some buy-in opportunities for you guys yourself, I highly suggest it because this is a very good company to go after. So without further ado, we're going to get into our very last stock, numero 5, and let's do it. Okay, and for our last and final stock, number 5, it's good old Google going to the moon. This stock right here, I'm sure, is on everybody's wish list. I mean, this is just another one of those companies that just owns the world. Everyone uses Google. Everybody uses YouTube. I mean, I'm broadcasting this thing off of YouTube. So, they own just so much. It's almost ridiculous. So, we're not going to get into that. Everyone knows who and what a Google is. What we're going to do is we're going to transition into the Robinhood chart. So that way we could take a look at the 5-year history. This is also probably another company that is legitimately like on the borderline of being fair value. It's probably already, if not considered fair value, almost a buy. We're sitting at $1,272 as of right now. That's what it's trading at right now. If this stock was to just come down $200 to the low thousands, and if it hit $900 at any price target, I'm loading up on this company like there's no tomorrow. This company has not even hit $1 trillion market cap yet. It's sitting at $863 billion or something. This is $1 trillion company, just like Amazon, just like Microsoft. I mean, this is up there with the big dogs. So this has mucho room to grow. And I mean, you can even make a claim right now to start buying in and then start loading up more if it goes down. But for this, I'm taking a stance right here, right now, just saying at these current levels, it's overvalued in the sense of, I think a good / fair value would be a good value, and a great value would be in the low to mid 900s. High 900s would be a good value, I would say. To fair value would be about low thousands, so about $1,000 to $1,100. That's where your market's going to start being in the sense of you're going to have a lot less risk, but you're also going to be buying in at levels that we have not seen since 2018, which is pretty phenomenal. So to be able to make up that many years, I mean, you just got to take advantage on a company like this. You just got to take advantage of it. Looking at the 10K for this company, I mean, it's phenomenal. This is honestly one of the best companies in the world. So they have one of the best balance sheets in the world. They have virtually no debt. Now, they do have debt. Their long-term debt actually is sitting at about $4.5 billion. But if you look at their cash and their cash equivalents and marketable securities, they are sitting on $120 billion. So I'm pretty sure $4.5 billion is nothing but chump change for them. They can write a check and be done with it. So this company not only has insane amounts of money sitting on their balance sheet, but they have virtually no debt, and they just keep increasing their revenues. I mean, look at this. Increase, going all the way back to 2012 to go all the way back. Increase. This company generates money like they are just a printing press. It's ridiculous. So don't sleep on this company. I know everyone probably thinks that, oh, Google's already seen its limitations and there's not much left. No. This company has much more to go. And their balance sheet's not going to be holding them back if that's what you guys are looking at. Everyone knows that this is just a phenomenal company. If you're not looking at them, and if they are not on your watch list, then you don't have a good watch list. Because even if you guys don't want to buy into Google, Google is just a good indicator for the market. I mean, it's just a good way to see kind of how things are going. If Google's down, there's an issue. And it's an issue that you should probably start looking into, because it might lead you down some other sectors that are going to start getting hit, like i.e. tech sector, i.e. any other sector that could possibly be influencing that. So this is just a stock that you should just honestly be having on your watch list. Whether or not you want to buy it or not, it's a good indicator. But if it ever drops down to the 900s, to the low 1000s, we're talking about a company that you should be really stockpiling on if you have that kind of cash just laying around. So that right there is going to wrap it up. I tried to keep it as short and brief as possible, but we're going over 5 stocks, and I got to at least give some time towards each one. So, I mean, the video length on this is going to be a little extensive, but I appreciate you guys hanging in there with me. I hope you guys got something from this. I hope you guys learned. And please smash that like button and follow me, subscribe. Show some love, please. I'm trying to get this channel to grow. I'm trying to grow as just an influencer, and I am doing my best. So leave some comments, let me know what I can do to improve, and if there's anything that you guys want me to look at stock wise, or if you guys have questions or information or need help, let me know, and I will be more than helpful. I will also have a link in the comments for Robinhood. If you guys do want to, I do have a code in there where we can both get a free stock if that's your first time. Take advantage of it, because why not? Otherwise, I hope you guys have a good day, a good week, and stay safe, stay healthy, and please be safe. Have a good one, guys.